Good afternoon to all of you. This is Ranjan from smartfinanceinc.com. This is the website smartfinanceinc.com. So in this particular video, I am going to describe one very important concept. Those who are the member of our group, that our Telegram group. So we are flagging these things every month. So yesterday also we have put these things in our forum. So how the Nifty depth you will calculate using the VIX. So the subject of today's discussion will be how we can use the VIX to predict the depth of the market for the month of January 2025. So before I should start the session, I wish you all Happy New Year. And this is one of the oldest method and many people are getting excellent success. And if you test this method for 10 years data, means in 120 months, you will find out in 110 months or more than that, the accuracy will be there. So what is the depth? So in the January 2025, whatever the high will be made or low will be made, difference of this high and low, if you subtract the high minus low, you will be getting 982 points. That is what this depth calculation will say, and this is minimum, and it can go slightly more than that. And very rarest cases in the 10 months, in the 10 year, it has given less than that. But 110 months, it has given more than that. So whatever high will be formed, whatever the low will be formed in the January 2025, if you take their difference, that depth will be 983 points. How it is being calculated? I'll be taking the day one's closing VIX. So whenever VIX is not there, you can take the volatility, yearly volatility also. So here I'll be taking the closing VIX for the Nifty, then closing price of the Nifty on the first day. So why it is faster days closing and all that, you can get it in my other lectures. So here, if from where I got this thing, I have just gone to the investing side. Here, January 1st, 2025, 14.4375. This is the 14.4375. So similar way, if I just go to the Nifty spot data, I can get the historic data here. So if I click here, I will get the historic data for the Nifty, and this historic data for the Nifty also will give me historic data for the Nifty also will give me the closing price on the historic price. Say it is 23,742.9. 23,742.9. So once you get that, your calculation will start. So this VIX is yearly volatility or yearly VIX in percentage terms. So first we have to convert into the daily VIX. So for that, I'll be taking 4375 and dividing this entire thing with square root of 365. So by this process only the conversion will happen from yearly to month. So once this conversion happened, I want for monthly. So I will be multiplying with the square root of 30. So after you do this, then I need a depth price range. I will be multiplying it with the closing price, which is 23,743, 42.9 rounded to 40. So whatever the value you will get, so that will be a big number because percentage we have not factored in. So 98,274.299. So this is the value we will get. Now if I divide things with 100, because it is multiplied with 100, so I will be getting 982.75. This is the range. This is the depth for the market for the month of January 2025. So this is the depth we will get. So once we get the depth, now our job starts how we can use these things for our trend forecast. So you got a depth now. So this is the 982 point depth will happen between the high and the low. now you have to apply your own wisdom, your rules, your regulations, your methods, and convert this depth into your profit. So that is your job. So what I am going to do here, I am multiplying all Fibonacci ratios here. I am taking the Fibonacci ratios till 0.786. Then I am taking all growth ratios 1.236 to 2.618. So once I multiply that same things with 982, that means I am multiplying 982 with 0.236. So I am getting some values here. So that I will be adding with the past day's low and high to get the range record. So first day, what was the low? So Nifty first day was 23,562.8. And similar way, so high is forming today also. We are forming the high 24,071.15 is now the high has happened. So now if I go here and just see add these values to the low, I'll be getting the first 0.236 retracement level, which is telling me if the price crosses 23,795, the closing was 23,743. So it is on the 1st January 2025. If it crosses this, it will set the uptrend above 23,938. It will be uptrend will be set. Reversal will be 24,170 to 24,335. If this penetrates, then Nifty spot can go to 24,545. This is what we are expecting. So once it crosses that, then it can go for the higher levels, because this is the minimum depth we want. However, during this process, the highs will change, the lows will change. So each time the highs is changing, lows is changing, we have to keep on changing. So few minutes back when I started this session, it was 23,972. However, currently if you can see that it is 24,071. So 24,071. If you put that, what will happen? The downside things also will change. The short entry sides will change. Now you can say, once I put this high, my downside projections are changed. Depth also changed. Out of 982, I have achieved 508 points. Now my downside downtrend price point has come 23,839. If from here market falls 23,839, I will have a downside breakout, and if that downside breakout happens, then it will have a reversal same way till 23,463,299. If this penetrates, then it will go to 23,088. So here I have given you all clues about what will be the trends in upside and downside, along with what will be the reversal zones of the different trends. And if this reversal zone penetrates, it will have what kind of optimum targets, that also I have told you. So observe it for the entire month of January, then you can come to conclusion whether these methods work or not. So why we should follow mathematical models? Because everything in this universe is mathematical model only. The rotation of your planets, mathematical model. Every day your season change, mathematical model. Even your digestive system also is a mathematical model. You are waking up, walking, going for work, coming back, your sleep cycle, your eating cycle, your brushing cycle, everything is a mathematical model. So if you are full with mathematical model, then how you will deviate from that? It is in nature. So without using this kind of unique mathematical model in your trend forecast, it is impossible to get success in the market. You keep it in writing. If you are hearing this video through any channel or through my channel, keep it in writing. Without following a valid mathematical model to get success in the stock market trades or investment is impossible. So during this thing, you have seen only one model, one such model. In our softwares, we have used near to 9 volatility model for intraday and positional trades. We have used the volatility. This is only one part you have seen. we have used the volatility with GAN, we have used volatility with Fibonacci, we have used volatility with Elliott, we have some independent volatility studies. So this is, you can say VIX is one, but you can use in different ways. Similar way, volatility is one, you can use it in different ways. So here you can say number of ways we have utilized this volatility, and this is how our software works. And this is not a costlier tool, anybody can afford it if you have a will to use any software. I am using the word will, because many of you traders, those who fail in the trade, 99% of the traders, those who fail in the trade, they do not follow any valid model, number one. Number two, they do not learn anything. So because they think it is an easy job, only guesswork it will happen. No, market follows a perfect mathematical model. So these models you can learn from our GAN course. We have given 34 intraday mathematical techniques, and many recorded video techniques are here. 11 best mathematical intraday trading technique I have given with this course itself. So here, those who are having the intention to learn, they can get these things through our courses. So here the courses comes with very good mathematical calculations. So the software what I have shown to you, it is coming at a price of 6,000 rupees per year, or monthly subscription you can take 590 rupees per month. Similar way, we have all different courses. These courses, GAN course, Fibonacci, Elliott, all these are unique courses because this is our own innovation, our own creation. So these courses having extensive use of volatility inside it. Extensive. We have utilized the volatility to the maximum extent these courses. And 40 hours of courses, you can see GANs, all structured way we have given. So how many 11 techniques, all are mathematical. So everything is using mathematics, calculations, and anybody can master it. Only it requires you should have a will to learn and apply it in your trades. So that two actions of yours will make you successful. Will to learn, apply those techniques in your decision process and test it for a couple of days whether it works or not. The things I have shown here, you may be seeing in a video, you may ignore it and go also. But if this is being given with calculation, nothing wrong if you can take a picture of this, whether 982 point is coming or not end of January. Take a picture of this and introspect at the end of January. Test it whether it has achieved or not. If it has achieved, next month you yourself can calculate the way I have explained it. By this process only you can enhance your skill, and by this process only you will be successful in the trade. So take a bow in this 2025. You should learn, educate yourself, and be successful in the market. So if you like this video, give a like, share with your friends, and do not forget to subscribe the channel, and do not forget to test this depth at the end of January 2025. Thank you very much. Thank you for your time.